The magic of RSI trading with ICT concepts. This video is for educational purposes only and should not be considered financial advice. The RSI has long been a go-to indicator for many traders. It measures whether price is overbought or oversold. But if you pair it with ICT concepts, it has many other uses than that. Similarly to the MACD indicator, you can measure when a divergence happens when price moves higher or lower, and the RSI moves in the opposite direction. These are perfect opportunities to look for reversals. In and of itself, you wouldn't take a trade off of a divergence. But if you can add other confirmations, such as ICT concepts, along with the ideas discussed in our previous videos on trend lines, moving averages, Fibonacci and MACD concepts, you can find very nice high probability setups. In this video, we will show you how to use the RSI indicator to enter and exit trades using ICT concepts. Stick around till the end to see how we can use the RSI indicator alongside two other indicators to get amazing entries. RSI settings. The settings we use for the RSI are a 4-period RSI with the 70 as overbought and the 30 as oversold. Confirm displacement with RSI. You can use the RSI indicator to confirm ICT displacement to start looking for your entry trigger. When you see a displacement, you can confirm it when the RSI is above 70 for an upside move and below 30 for a down move. Here are some examples of using the RSI to confirm displacement. If we look at the chart, we can see this move down here can be thought of or looked at as displacement, but it did not cross the 30 level. This move here is true displacement. Price did cross the 30 level. This is the candle where you would enter. Price moved back into this fair value gap and hit the 50% level, and that is your entry. Here is another example of displacement. Price moved to the upside and then crossed above the 70 line. That is true displacement. Then there was a retracement back into the fair value gap and hit the 50% level. That is your entry. Using RSI divergence to confirm ICT entries. When price has a strong move in one direction, but the RSI does not move as far in that direction, that is called a divergence. Here are some examples of confirming your ICT entry with RSI divergence. This is just to show you what divergence looks like. This is a longer-term divergence, but it is still divergence nonetheless. Price moves to the upside, but there is no confirmation in the RSI. This is where you can find an ICT entry. Price moves to the upside, but the RSI stays level. Then you see our displacement. That is where we will enter. This example has a lot of things going on in it, which is an awesome opportunity to take a trade when you see all of the ideas playing out. You have liquidity formed, liquidity taken, and then the opposite liquidity is the target. Divergence happens with the RSI and price. Then there is a displacement, a break of structure, 50% of the breaker which is here. Price reaches back to it, and there's your entry. And then the move to the downside to take liquidity. As promised, here is a way to use the RSI with trend lines and moving averages to get amazing entries. Using RSI with trend lines and moving averages for early entries. When price reaches a key Fibonacci level or a larger moving average, you can look for the RSI to break a trend line, and then you can also look for price to cross the 4-period EMA with a shift of 4. Make sure the RSI has moved above the 70 line and then has reached back down close to the 50 line for a sell, and then has moved below the 30 line and has reached back close to the 50 line for a buy. Here are some examples of using the RSI with trend lines and moving averages for early entries. In this example, we see a divergence. Then there is a trend line break in the RSI. We can see the trend line break here on price. The RSI trend line break happens first. That is a possible entry. Price has also crossed above the 4-period EMA and the 50-period EMA. That could have been an entry. This is an ICT entry with a break of structure, then a retracement back to 50% of this order block. This is that other example we had that pretty much had everything inside of it. Again, liquidity, your divergence. Then there is a trend line break in the RSI, which matches up with our displacement. That does not break a trend line in the price, but it does on the RSI. That could be considered your true displacement, but also one of your entries because price crossed the 4-period EMA. However, when you see a move this big, you want to wait for some type of retracement, and then we have our entry retracement back into 50% of this breaker. Then there is a down move and price eventually breaks a trend line in price, but the trend line in the RSI had already been broken. Your exit would have been after liquidity was taken. Here's one final example. There's divergence. You have a break of structure, and then you have a trend line break as well. Price is close to the 50 line where the trend line break happens. This is the displacement above the 70 line, which occurs here. This could have been an entry. However, you did not have the displacement. And this is the true displacement. This entry is using moving averages as your entry, crossing the 4-period moving average and the 50-period moving average. This entry is off of the ICT concepts of displacement, break of structure, then a retracement back to the optimal trade entry. Then price moved to the upside. And this is probably another entry off of a fair value gap in an order block, and then price really moves back up to the upside. We hope you enjoyed watching this video. Please like and subscribe for more videos like these. If you have a question or comment, please post it in the comment section below. Thanks for watching.